my suggestion, I've seen this play out time and time again, is that in your communication to your investors, to your prospects, one sentence saying, did you know you can use your retirement dollars next deal? That alone, from my experience, sponsors tend to get about 10 to 20% of their raise, whether it's through an SDIRA with the legacy custodian or a solo 401k. I, of course, have ties to Rocket Dollar. Powerful, especially as more folks are moving self-employed for better or worse. The solo 401k is pretty exciting.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Dan Kryzanowski is a capital raiser, equity owner, and LP investor generating double-digit yields and lower taxes via commercial real estate. He's currently bullish on Texas commercial real estate, industrial, self-storage, and 1031 and Delaware statutory trusts. Dan, you're a wicked smart dude. I'm lucky to have you on the show. Thanks for coming on today.
Sam, it's great to be here. And if the calendar's right, I think I was originally number 44. So thank you for bringing me back. And I think today may actually be my 44th birthday. So, hey, how about that? Hopefully there's
Man, look at that. Number 44 on your 44th birthday. That's right. Yeah, you came on the show January 12th of 2021. So it's been, I mean, that was 500 and something episodes ago. Tell me, what's happened here in the last almost year and a half?
Yeah, I think high level, and I was at a CEO conference here in Austin, and one of the gentlemen on stage said that, hey, in 2021, people were buying, and in 2022, people are shopping. And this extends everything from going to the supermarket because of inflation to, I think, our world. And I think it's, in some ways, it's a great thing. In some ways, it's a challenge. So for fellow sponsors and hybrids on this call, realize that you're not the only game in town. And somebody, if they are interested, your buddy that you worked with for 20 years at corporate, he or she is now listening to multiple podcasts, going to a few shows, talking to multiple sponsors, doing the diligence. So just throwing a deal out there and thinking, if you build it, they will come. Not as much. So, I always think it's, what education, what can you play into? Have you listened to your audience? Your investors in the past, year and a half, and then what are you bringing them now to fulfill their needs? So I feel this in all walks of life, but especially here in our real estate and passive investing world.
Man, I'd say that's absolutely true. The number, I feel like the investor conversation has changed for me. I don't know, I probably have 15 investor calls a week. And it's changing. The preferences are changing. You're right. I'm hearing that more and more. It's like, oh, hey, I've talked to XYZ. I mean, you're right. They're shopping. I'll hear, 8 to 10. We're talking 8 to 10 sponsors figuring out what's out there, which is, well, they should. As a limited partner, I encourage that. Go talk to a whole bunch of people. You may find you hate what I do. And I don't want you in my deals if you hate what I do. You may find that I have bringing you something unique to the table that you really find valuable. So I want this to be a win-win, but they are shopping. And the other thing I think I've seen here recently, maybe you can attest to this, is people are shying away from the appreciation play and really hunting for just cash flow. And I hear that across the board. Have you seen that?
I have. And we, in that spirit at BV, we recognize that, especially with inflation creeping up. A lot of folks said, hey, boy, I'd love to know I'm going to get a win for a year. And then let's see where the world plays out. So, typically a development multifamily is 3 to 5, 3 to 7 years. Through this feedback, we at BV said, hey, how about we chop it up to a stage 1 and stage 2? And as a thank you to our current investors, we paid upwards up to 20% on money for up to a year on the stage 1. Once again, listening to your investors, this is what was value. Now, that said, we feel a lot of them are going to roll the principal and interest into the second stage. But by giving folks, hey, guys, you want to hop off the train or you want to wait a year and come on the train? I think investors prefer this sort of optionality. And once again, if you have the scale and you do your diligence, the legal, et cetera, it's something you can provide your investors.
Now, stage 1 versus stage 2, are you talking about on a development deal where there may be no potential, cash flow early on?
Yeah. So think of, generically call stage 1 the land, almost a land loan per se. Mm-hmm. Then stage 2 is going to be your typical development. And this can be your, development multifamily, or maybe it's lots and you're putting the pipes underground and then people come and purchase the lots. Both of these we've seen pretty attractive, at least here in Texas.
Right. Yeah, that's really, really intriguing. Yeah, you're absolutely right. I think that's something that providing that options providing those options for your investors. And we've seen that also just in class shares. I mean, that's become a big thing, is the Class A, Class B. Do you want to clip the coupon? Do you want to clip the coupon with upside but take a smaller clip? I mean, what's that look like? Tell me, what are you guys investing in right now in BV Capital? And then maybe if you can give me some color to that as to what you guys are doing to protect against inflation, but also just protect against market risk.
So one thing, kind of in the spirit of our parents, stock bond portfolio, we at BV feel there's still a similar want and need that folks want some appreciation. And then at times folks want a portion of their portfolio that's a little more predictable. So, for example, and frankly, we haven't even marketed this. We have a triple net industrial portfolio that pays a monthly distribution. I like to say it's wonderfully boring because guess what? You write a check and every month the check comes in the mail. And it's a great way to also mutually know each other.
Right.
To the point that we have up to, close to more than a half dozen investment advisors have actually trusted us with their client money. If you've ever been through that route, it's a hell of a lot of due diligence and everything else just to even have that conversation. So that was a pretty good proof point. Separately, I mean, we've had some stuff with Sizzle on the multifamily side that we, feel is going to be a good, historically has been a 20 plus IRR, whether it's in student housing, workforce housing. And what I think is unique is, I call it the midpoint between doing a 1031 and just paying full taxes today. There's many folks, all stages of life that own a few properties, whether it's inherited, they've had it forever, and they want to probably get rid of some of that. Why? As well, they want to cash in, or they're just like, hey, this is a 1940s build. I'm just tired of operating it. There's turnover, or my longtime tenant is moving out. Now's a good time to break ranks. I don't want to pay high taxes in a place like Texas. So, one thing I think that's unique that we're looking into is a DST. So a Delaware Statutory trust. In layperson's terms, just think if you have a property called Property A, probably at a gain, you can sell, take the appreciation, move it to Property B. Okay, it's kind of the same logic that you're owning and operating. Or you can pay the taxes, pay a pretty heavy tax. Now in the middle, if your goal is to defer, you can do that. So there's a saying called swap till you drop. Some people, they say, ain't never going to pay, and I'm going to take it to the grave, and part of my legacy, part of my planning for the next generation. That's what a DST can provide. Now, that said, what rubs me a little bit wrong as an LP is a lot of these DSTs are only 4 or 5%. This is all in, not just a pref. And I'm like, something just doesn't smell right. It seems like pretty high in fees and everything else. Not saying this isn't good product, but in good faith, I think an operator could pay double-digit returns on a DST and still have a healthy return for them for the time and effort to go into it. So, summing up on that, and this is all feedback from our investor base, is folks say, hey, I'm selling something. I don't still want to own, operate. I might take out a few $100,000 for myself, but the rest I want to defer, let me think about it a bit more in 3 to 5 years. I think a DST, particularly a property with double-digit returns, is going to be a pretty solid niche for the second half of this year and the next few years.
How does a DST differ from a 1031?
And I'll admit, I'm not the CPA, the lawyer expert, but the as explained to me is that once again, you own Property A, you own and operate today. So what's your options? You can keep on owning and operating, or you can sell. If you sell, you generally have two options. One, of course, you pay your taxes, right. Or you own and operate Property B. Pretty much the same, it's just a different property. Now, in the middle, I like to say per se is, well, I don't want to own and operate, but I want to maintain the tax benefits. Right. You can go into a DST. Many DSTs are usually a portfolio, and there's different reasons behind that. That generally pay low single digits or mid single digits overall. But once again, what they are selling is, hey, here's a diversified portfolio, and you're not paying taxes. So, folks' that main goal is, I want to defer taxes. That's the attraction of the DST. Now, all said, what I think is cool, historically, I said it's been a portfolio. There's a lot of fees baked into it. Like anything, the curtain's getting pulled off the Wizard of Oz per se. And I think it's becoming time like, hey, here's a pretty slick property that frankly, if I just had cash on the side, I may even consider, it might be a mid-teens IRR, for example. So anyways, just cool little niches I think are out there for, as going full circle, as folks continue to shop per se. This is something I think to not just us, but, investment advisors, folks that play that role for their family should become a little more aware of.
Is the DST set up by your firm, and then multiple people can roll their properties into the single DST, or is it a DST each individual sets up and they then roll into your?
There's some paperwork, and there's folks that are experts that have been around the block a few times that we, for example, if we at BV go down this route, we're going to partner with. There is some paperwork, probably for a different discussion, not for today's call.
Sure.
That has to be completed. But one thing I would be aware of, there is a timeline. There is kind of these windows it's much like a 1031 where it can't be, hey, we sold the property in, X days ago, and there's 3 days to go before I have to pay taxes. You have to get moving a little bit sooner. So, as I just spitball this in conversation, folks are saying, well, yeah, I'd like to sell maybe May, maybe June. These are conversations I have back in April and March even. So people I think they're aware at least that if they want to defer taxes, you really have to start thinking a good few months ahead. So I compliment, you and our community for sharing this on the podcast. So this is now kind of something that people do in their mental checklist as they look at their assets.
Right. No, I think that's great. That's absolutely great. Tell me, what are you guys investing in? I know you've done industrial, multifamily, and you even mentioned student housing. What are you guys doing right now to find opportunity at BV Capital?
Yeah. So, the benefit being boots on the ground in Texas for many years, particularly in the two largest cities, Dallas, Houston, is we tend to find some pretty good off-market opportunities. And I get it, it's a buy high, sell higher, but I think what BV's shown over the decades is certainty of execution. For example, our industrial fund, we closed on 4 properties in 4Q last year. So also have that ability, something a little unique. I think we can all pick on our California friends here. They weren't as versed in student housing. Let's just say occupancy was comically low. We had the ability to come in at a great, very favorable cap rate, which in turn we, share those benefits to our investors. So those are a few things. Sorry, that was my, I didn't call it my birthday buzzer that went off. Sorry to scare you there in the background. Otherwise, it's something you didn't mention, but, folks that know me, I'm still extremely bullish on self-storage. And, why is that? I feel storage is now, it's a natural extension of the housing experience. So when I say housing, I mean living in the 21st century. A few things on that. So, historically, we can joke storage was for stuff that we really didn't need, or, kind of the crap, as they would say.
Right.
What it's changed into, I think, and COVID showed this, is folks know, like, hey, if I can even find an extra bedroom, I'm paying at least $1,000 in rent. Or, city in Austin, it could be in the hundreds of thousands on the house. So with that, in case I don't want to feel like I'm truly hoarding, I want to use storage. And it's not just for the Christmas tree. It could be for your kids' winter clothes. It could be for your tax documents. Some pretty important stuff here that's becoming, whether it's literally at a storage facility or on site, say at an apartment complex, or something that you consciously build out in your garage. But most people aren't going to go through that effort. They're going to defer because it's still a pretty favorable cost. So with that, I still think there's a very healthy appetite for storage. There's also specialized storage for folks of higher income. Think of the Tesla crowd. Pick your zip code with 6-figure income plus. There's many of these. So call it a very exclusive man cave. One of my buddies said he couldn't say that. His lawyer said he couldn't say that. But, frankly, there's some of that out there. So there's a whole bunch of types of storage that go into it. And, I think it really comes down to is folks want to declutter. Even today, some folks might say, shit, I can't have, a crib in the background because my newborn's now 6 years old, things like that. So it leads into storage. So I think it's kind of a natural extension of, especially as cultures are merging too, folks want to do this. And, and not just even climate controlled, you're talking for boat, RV. We talked about the Tesla, the fun storage. A lot of folks are refurbing. Think of the Kmarts, the Woolworths of the world. They're being refurbed into storage, particularly in the middle of the country. So, a lot of folks, it's becoming a natural, I think, way of life in the 21st century. And I don't think people are hoarding crazy stuff as some of the stories. As I said, it's just folks get used to it. They get used to it at a price point. You check in every 3 to 6 months to move some inventory for your personal, and you go from there.
Yeah, and I think you bring up some really interesting nuances. I think the storage space that most people aren't considering, and you call it specialized storage. And certainly we're seeing that demand, on the RV and boat storage side of things. I mean, it's insane. I mean, just from the delivery side alone, they have no place to put them. But I also think it's interesting how you clearly, said, look, the days of just storing piles of useless clothes and junk, like, I think those are not behind us, because there's still going to be days of piles of useless junk, but it's changing. It is becoming smaller homes, people moving into tighter spaces. And like you said, if it's a few $100,000 for an extra bedroom that you're not going to use, why not just get a storage unit for $100 a month and be done? Okay, we can put all our tax documents and our Christmas trees and all our other random stuff in there. One of the specialized storage things that I've looked at, and obviously not invested in, but I think is really interesting. Have you seen those high class, like you call them man caves, but they also make them for boat and RV storage, where they're actually selling the units. They build this super schwanky facility, with wash bays and clean out this and detail crews and everything else, and they sell you your man cave. So they'll maybe build 200 units and sell them each off. They parcel them out and actually sell them by the unit, create an HOA basically for the storage facility. I mean, that's specialized storage.
Yeah, it's definitely specialized storage. Yeah, no, it's out there, and it'll continue to be in certain zip codes for sure.
Yeah, for sure. And I think that's a really just a neat way to look at that. Knowing there's lots of runway there for a variety of reasons. I think that's the other thing that people have said in the storage market all along, is that no matter what the economy, there's reasons that people want storage. Mm-hmm. So it's either upsizing, downsizing, changing life, changing careers, moving. It's always in fashion. What are you guys doing right now to take advantage of the kind of the market dynamics that surround storage?
I mean, for me, like a lot of us on the call, I'm a hybrid. I mean, fortunately, I've built up a pretty sizable retirement accounts, self-directed accounts, solo 401k through storage. We've had some, myself as an LP investor, and those that I've introduced over the years have had some, I'd say, pretty sizable and attractive exits. And like anything, every few years, I call it the next generation of storage, whether somebody's up and coming or they're coming from some recent exits in multifamily. Folks that are long, maybe, call it 2 to 6 facilities, but their goal is to get to 20. So far, so good. I've probably invested with 4, I'd say, newer folks to the scene in storage. And whether it's development, we're on track for development, or if it's a value add, it's paying out as it's supposed to be at the moment. So, I'm excited, and it varies. Some folks are doing strictly, everything's automated from when you book to there's no humans in any way, shape, or form. Other folks are a little more old school. And then, as we talked about, kind of the luxury storage, that's just kind of a really unique, fun model that I still think has, tremendous upside.
Yeah, absolutely. Now, BV Capital also invests in multifamily. Is that right?
Yeah, the backbone of BV historically is in multifamily. It is a bit more DFW. Total exits of over $250 million to date. So, and it's been a good mix of, as I alluded to before, student housing, workforce housing, some development, some value add. I think the new thing, once again, just, Texas is still a real boots on the ground state. We do have a lot of folks with the BV logo. So we find, even in this market, the needle in the haystack of a piece of land that's, I don't want to say pennies on the dollar, but less than $1, which is a minor miracle these days.
Right.
And, we can do stuff with it. We found a tract over 100 acres in Galveston. I think the only one out there. A lot of folks want a second house or want a beach. So it's little things like, hey, as an investor, in addition to getting double-digit returns, how about you want first look at buying one of these plots? That's very important to some folks. So, we've done some really strong surveys. Obviously, a lot of one-on-ones, some more exclusive events with 20, or so folks, and we're going to hop across the state to the large cities for that to really get feedback. And that's what that's what's kind of led outside of the fund to our single asset offerings over the past year.
Got it. Man, that's fantastic. Dan, we're almost out of time here, but I've got one last question for you. For people that know you well, they know that you've got extensive background in the self-directed IRA space. Mm-hmm. What do you see as the number one opportunity for capital raisers in the self-directed IRA space? Yeah,
my suggestion, I've seen this play out time and time again, is that in your communication to your investors, to your prospects, one sentence saying, did you know you can use your retirement dollars? Next deal. That alone, from my experience, sponsors tend to get about 10 to 20% of their raise, whether it's through an SDI IRA with the legacy custodian or a solo 401k. I, of course, have ties to Rocket Dollar. Very powerful, especially as more folks are moving self-employed for better or worse. The solo 401k is pretty exciting. So yeah, I just think that. And then also for folks that are thinking of JVing, co-GPing with folks, your old corporate money, this is a great pocket of money that frankly you can't touch anyways without paying taxes for a while. So take advantage of it now. Anybody with any questions, just ping me on LinkedIn. LinkedIn is great. Say you heard it here, and we'll have a chat.
Awesome, Dan. And that's my last question here for the show is if we do want to get in touch with you, what's the best way to do that?
Yeah, LinkedIn is great. And then I joke, if you can spell it, you can get it. D. Kryzanowski will get you a few pennies off your Rocket Dollar. And for our fellow sponsors out there, I'm happy to share my VIP code. So, please reach out one-on-one.
Awesome. Dan, thanks again for your time today. It's great to have you back on the show.
Great seeing you, brother.